Kenya's economy is facing tough times. After years of strong growth, things have slowed down in 2025. This slowdown is causing concern for many Kenyans. In this essay, we'll look at the key factors behind this economic challenge. We'll also explore what needs to happen for Kenya to get back on track. The slowdown is evident in various aspects of the economy, from rising unemployment to soaring prices. Understanding these challenges is crucial for finding solutions and ensuring a brighter future for Kenya. One of the most telling signs of an economic slowdown is a drop in GDP growth. This single indicator often acts as an early warning, signaling that the economy may be heading for tougher times ahead. GDP, or gross domestic product, is the total value of goods and services produced in a country. It's a crucial measure that economists and policymakers use to gauge the health and direction of the economy. Think of it as a measure of the country's economic activity. When GDP is rising, it usually means businesses are thriving, jobs are being created, and people have more money to spend. When GDP growth slows, it means the economy is not producing as much as it used to. This can lead to fewer job opportunities, lower incomes, and reduced consumer spending. In Kenya, GDP growth has slowed to a worrying 4% in 2025. This figure is a cause for concern among experts and ordinary citizens alike. This is significantly lower than the 5.5% growth projected earlier. The gap between expectation and reality highlights the challenges the country is currently facing. The agricultural sector, a key driver of the Kenyan economy, has been hit hard by drought, leading to reduced tea production. Agriculture supports millions of livelihoods, so any disruption has far-reaching consequences. This decline in agricultural output has had a ripple effect on the entire economy. Businesses that depend on agriculture, from transporters to exporters, are also feeling the strain. The slowdown in GDP growth is a clear indication that the Kenyan economy is facing headwinds. It's a signal that urgent action is needed to prevent further decline. Addressing these challenges is crucial for reviving growth and ensuring economic stability. The choices made now will shape Kenya's economic future for years to come. When the economy slows down, one of the first and most visible impacts is often job losses, as companies struggle to stay afloat and are forced to cut costs. Kenya is no exception to this trend, and the effects are being felt across the country, from the bustling city centers to the quieter rural areas. The unemployment rate has climbed to 5.7% in 2023, up from 4.9% in 2022, according to recent government data. This increase means that more Kenyans are struggling to find work, making it harder for families to pay their bills, put food on the table, and plan for the future. The manufacturing and services sectors, which together employ a significant portion of the workforce, have not been able to create enough new jobs to keep up with the rapidly growing labor force. This shortage of job opportunities is especially worrying for young people and recent graduates who are entering the job market with high hopes but facing limited prospects. The rising unemployment rate is a stark reminder of the human cost of economic slowdown, as more people face uncertainty and frustration in their search for work. Addressing this challenge and creating more job opportunities is essential for improving the lives of ordinary Kenyans, supporting families, and ensuring long-term social stability in the country. Inflation, the rate at which prices for goods and services increase, is another major challenge facing Kenya. In December 2024, inflation reached 3%, driven by higher food and transport costs. This means that Kenyans are feeling the pinch as their money buys less than it did before. The rising cost of living is putting a strain on household budgets, particularly for low-income families. Basic necessities like food, housing, and transportation are becoming increasingly unaffordable. The government needs to take steps to control inflation and provide relief to those most affected by the rising cost of living. Failure to do so could lead to social unrest and further economic instability. Kenya's public debt has been growing steadily in recent years, reaching 70.1% of GDP in 2023. While this is projected to decrease to 68% by the end of 2024, it still raises concerns about the country's long-term fiscal sustainability. A large debt burden can limit the government's ability to invest in essential services like education, healthcare, and infrastructure. It can also lead to higher interest payments, further straining the budget. Addressing the debt issue is crucial for ensuring that Kenya has the financial resources to invest in its future. This requires a combination of fiscal discipline, debt management strategies, and measures to boost economic growth. The economic challenges facing Kenya have not gone unnoticed by the public. In 2024, widespread protests erupted across the country, fueled by anger over tax hikes, government spending, and the rising cost of living. These protests, largely led by young people, reflect a growing sense of frustration and disillusionment with the government's handling of the economy. Social media has played a significant role in mobilizing protesters and amplifying their voices. The government has responded to the protests by scrapping some controversial tax measures and reshuffling the cabinet. However, more needs to be done to address the root causes of public anger and restore trust in the government. Despite the challenges that Kenya faces today, there is a growing sense of hope and determination for the future of the country's economy. Across the nation, Kenyans are coming together, driven by a shared vision to rebuild and strengthen their economic foundations. The country boasts a young and dynamic population, a rapidly expanding middle class, and a strategic location that positions Kenya as a vital gateway to East Africa. These factors provide a strong base for economic growth and regional leadership. To get back on track and unlock its full potential, Kenya needs to focus on several key areas that can drive sustainable development and prosperity for all. First, investing in agriculture remains absolutely crucial. Agriculture is the backbone of the Kenyan economy, supporting millions of livelihoods and providing food security for the nation. By investing in modern irrigation, adopting drought-resistant crops, and embracing advanced farming techniques, Kenya can significantly boost agricultural productivity, increase food exports, and create more jobs in rural areas. Second, promoting manufacturing is essential. Developing a robust manufacturing sector can create thousands of new jobs, reduce the country's reliance on imports, and boost exports, helping Kenya compete on the global stage. Third, supporting small businesses is vital. Small and medium-sized enterprises are the engine of job creation and innovation, driving local economies and empowering communities. Providing these businesses with better access to finance, practical training, mentorship, and a supportive regulatory environment is crucial for their growth and long-term success. Fourth, improving infrastructure by investing in roads, railways, ports, and energy can reduce transportation costs, attract both local and foreign investment, and create thousands of new jobs across multiple sectors. Fifth, fiscal discipline is needed. The government must control spending, increase revenue collection, and manage debt effectively to ensure long-term economic stability and growth. And finally, good governance is essential. Tackling corruption, promoting transparency, and ensuring accountability at all levels of government are necessary for creating a conducive environment for investment, innovation, and sustainable economic growth. By focusing on these critical areas, Kenya can overcome its current economic challenges, build a more resilient and inclusive economy, and create a brighter, more prosperous future for all its citizens, one where every Kenyan has the opportunity to thrive.